And you're welcome to another edition of our weekend business program, Capital Market, live on Channels Television. I'm Ladi Williams. It's great to have you join us. It's been quite an interesting week with the markets globally and right here in Nigeria. Let's start with major equities markets around the world now. End of the third trading week of October, mostly mixed amid fears of rising interest rates. The United States stocks climbed as Wall Street closed a volatile week on a high note despite some disappointing earning reports. The Dow Jones Industrial Average gained 748.97 points, about 2.47%, to close at 31,082 points. The S&P 500 rose 2.37%, while the Nasdaq Composite added 2.31% to 10,859 points. In Europe, the UK's FTSE 100 gained 0.37%. The German DAX index dipped by 0.29%, while France's CAC index dropped by 0.89%. For markets across Asia-Pacific, it's also mixed sentiments. In Japan, the Nikkei 225 dropped by 0.43%, while Hong Kong's Hang Seng index fell 0.42%, while the China's Shanghai Composite Index gained 0.13%. And back home, activities at the unlisted securities market ended the third week of September in positive territory. To the NSE OTC exchange, a security index recorded a 0.28% increase. At the same time, the market cap rose by 2.69 billion naira to close the week at 960.88 billion naira due to positive movement in prices. However, the total value of securities traded during the week decreased by 38.18% as the market recorded a total of 127.9 million naira in value against 206.89 million naira recorded in the previous week. On the other hand, total volume of securities traded on the exchange rose by 39.35% week on week to 1.33 million units. Meanwhile, Central Securities Clearance System tops a list of 5 gainers with a 5.5% increase on its price. Niger Delta Exploration and Production leads 3 other decliners, down by 3%, while VFD Group was the most traded security on the NSE OTC market this week. And for the local stock market, sentiments ended the third week of September on a negative note. The NGXL share index closed the week with a 6.67% loss, while the market's value recorded 1.07 trillion depreciation due to sell pressure. Same time, stock performance across the 5 key sectors of the NGX is mostly negative, particularly on the industrial goods counter, which fell by more than 6%. The losses, which comes with 3 out of 5 trading sessions in the week, largely attributed to 29 equities, with the share prices of Airtel Africa as the major factor for the market's general dismal performance, while Academy Press led a pack of 32 other gainers with 11.4% gain on its share price. Meanwhile, shares of CWG, GTCO, and Fidelity Bank were the most significant contributors to more than 930 million shares traded in 15,700 deals this week. All right, now, let's drill down on what happened in the market and also talk about attracting diaspora investing in the local domestic market. We have Oluwatomi Solanke, CEO, Trove Technologies Limited, joining us right here. Great to have you, and you made it. The traffic was intense today.
Yeah, I know.
But I'm happy you made it.
Glad to be
quite an interesting performance. We could start off now with the U.S. markets that we saw. Quite an impressive week, even though the previous week we saw a lot of sell-offs, but now this week's best week since June. Yeah. Talking about the U.S. markets, how are you seeing it? Do you think the bottom is in there?
No, I don't quite think it is. I think there's still a lot of uncertainty, around a lot of things. There's still huge question marks that, people are still, very uncertain about. And I think all of the, temporary excitement that is coming into the market is nothing but what it is. I think it's temporary. I think until a lot of the question marks around whether we are going into a recession, around, what is happening with the whole Ukraine crisis.
Right.
I think, until all of these things are answered, and, there's been a lot of issues with several currencies around the world too as well. So a lot of economies around the world have been, affected by, all of this instability going on, in different places around the world. So
we see the US dollar strengthening, keeps on going.
Yeah, so until a lot of these questions, question marks are answered, right? I think, that all of that uncertainty will continue to be priced into the market.
And we know the Fed, they will keep raising rates. But now there is this little comfort, in the U.S. market that they're saying they might not be as aggressive, as expected in their next meeting. But I feel like they're going to be aggressive.
Yeah.
What do you think?
I share your sentiments. I think definitely we're going
maybe
to see
75 basis points. That could be on the cards again.
I think on the conservative side, probably 70, 75. But I trend more towards that 70 something.
I heard some chatter, about 50 basis points, but I don't know.
I think that's been very.
And maybe that's why we saw this good performance, but it remains to be seen if it's actually going to be sustained, into next week. Talking about the U.S. market. But let's bring it down here to Nigeria. We see, we were celebrating the NGX earlier this year. Best performer globally. But now, year-to-date profit has moderated below 10%. I think it's about somewhere around 3%, at this time. And it looks like it's going to get wiped off. How are you seeing it?
So I think like there are lots of things that are contributing to it. And I think like as, back to the same, thing I mentioned about the US markets, until a lot of these question marks are addressed, I think we'll continue to tend towards like bearish trajectory/territory.
It's been on a downtrend since.
So like, so there were lots of things like for, the past week, if you look at, the market like significantly declining, I personally attributed all of that to like Airtel, mostly large cap telecoms, some petrochemicals too as well, like going down. But the Airtel situation in particular, they peaked, just a couple of weeks ago, and obviously people are going to take profit off the table. But I think bigger than that, there are lots of macro issues. And, pre-election year, especially such a significant election year where one government, is going out and you're expecting, things can sway in any direction, right? Also coupled with, all of the currency risk that's happening in Nigeria. So all of that volatility will be priced into, the market. And I expect us to continue to tend towards bearish trends and people to go more into like fixed income, especially with like MPR going up. You will see people going out of equities and going more towards fixed income. Also with the T-bills auction, I think generally people will continue to go into like safer haven, safer assets.
Safety
right first,
now, risk off.
Right, as we approach election year and as, all of these question marks around, political uncertainty, currency risk, continues to exist.
Right. All right, let's look at another conversation now, talking about, attracting diaspora investing, into our local equities market. How do you think we can actually, push that? Even though we know it's a risky market right now, we don't know if they want to put their money, in here, but how can they make it happen? Talking about, diaspora this time.
I think the way I look at it, and I've had this, is a very interesting question because I've, had this conversation with like, lots of CMOs. And I think about it from two perspectives. I think the first thing for me is, to create a lot more excitement in the market, right? People say the markets are illiquid. People say the markets are not deep enough. And I think one thing that, we can do to, increase excitement around the markets or deepen the markets would be, to encourage more mid-sized companies to list on the exchange. We're seeing quite a number of, initiatives, one being the tech board by the NGX, where they're, motivating, loosening the requirements for companies to list on the exchange. I think, with, all of the excitement around, for example, startups, the tech ecosystem, and, business entities in general in Nigeria, I think, we can double down on, all of that excitement, that global excitement, and push a lot of mid-sized companies to list on the exchange. I think that would draw significant interest. You see on the VC side of things, the PE side of things, people are, every day you see news about one company raising capital, mostly from,
We've had a lot of that
so
year.
mostly from like, European firms, American firms. I think we can replicate that same kind of success if we push a lot of mid-sized companies to list on the exchange. Ultimately, the concern around, if they list on the exchange, like, is the market deep enough to support, a lot of their ambitions? That question mark remains unanswered, but I think that's one viable route. I think the second thing is also to sensitize and drive, like, massive retail participation in the market. I think looking at, like...
How are those trading apps actually helping with that?
Yeah,
Because I know there are a couple of trading apps right now, and... There was this story about one that, recently, went down. But I'm wondering, how does it really work, trading on these apps? How does it work?
So I think let me just, snowball into it, right? From why I think, like, retail participation is very important, right? And why I think, like, the trading apps play a very critical role. We saw what happened, with, U.S. markets with the Wall Street bets, and, like, how a group of people banding together can actually sway the direction of the markets, right? And I think, apps in Nigeria also play, like micro-investing apps, retail trading platforms, they play a very critical role in aggregating, people to interact with, financial markets, right? Not only the fact that they, democratize access to investing, they make it, very seamless and very easy, right? So, like, gone are the days where people need to, stroll into, like, physical, buildings, to collect KYC. We're seeing, like, quite a lot of, apps, democratize that process, make that process seamless, leverage on technology to make it, easy, transparent, and, from a distribution perspective, accessible to, the average Joe, like to the regular guy. So I think, like, investing apps play a very, critical role. Ultimately, there are also question marks around that.
Oh, yes.
With regards to, like, are these, platforms operating within the, channels of, like, proper regulatory process. Yeah. And also, concerns around, like, the technology. But ultimately, I think, like, there are more pros,
more pros than cons. Yeah. We will drill down more on those cons and the pros right after this break. Do stay with us. We've been talking to Oluwatomi Solanke, CEO, Trove Technologies here. We're talking about attracting diaspora investing right here to our local capitals market. Do stay with us. We'll be back in a moment. Welcome back. Still watching Capital Market live on Channels Television. We're talking about diaspora investing and in our domestic market here using trading apps. And we've been discussing with Oluwatomi Solanke, CEO, Trove Technologies. Thank you for staying on. So continue the conversation now. So I registered on these apps, and you're supposed to have a CSCS number. So how does it work? If you already have a CSCS number, you're trying to, onboard into the app so you can buy, Nigerian stocks. How does that work, really?
Yeah, so I think a lot of the apps that are currently on the market, I think the pure focus has been on, getting new entrants, into the capital markets. I think, like, if you look at overall participation in local capital markets, it's been abysmal, like, over the last couple of years. Like, even dating back to, as far back as, 5, 6, 10, years, it's always been abysmal, right? When you compare that to, like, the overall population, right? So a lot of them address that critical problem of, how can we get the general population investing in capital markets? And, from the data that I've seen, from the data that we have, over 80% of these investors are, first-time investors in the capital markets. We've seen a lot of, millennials, a lot of Gen Zs.
Gen Zs, yeah.
Investing in the capital markets. So a lot of them also don't have CSCS numbers, right? It's their first foray into, like, investing in stocks or investing in, any, financial assets. So, I think like as time progresses, there will be much more interesting things around, for the other folks that already have existing relationships, how to, translate all of that relationships into like one big ecosystem, allowing them, utilize all the same technology platforms that exist today.
Quite interesting. But looking at quite a number of Nigerians now, buy U.S. stocks from here, through these apps. And I'm wondering, isn't that importing?
Yeah. So I feel like, and people look at this thing from different ways, from different perspectives, right? I feel like on the, local side investing in, or, locals investing in, diaspora markets, I think we've not achieved that point of critical scale, or velocity, where people, the amount of money that people are investing is significant enough to create a dent. But other than that, I look at it also from an opportunity perspective, right? A lot of the funds that people would invest in, other financial markets, like people that are financial, literacy type experts will say diversify, diversify. The truth about it is, how can we get people investing in the first place? How can we get them even understanding, the concept of, particularly stock investing, right? And I think, that is more critical, because even if I'm investing, people are investing in other markets. So the first thing is people will find a way to do all these things regardless, right? So they invest in markets that they feel they see, an opportunity, or the market excites them, or they see like, short-term, to mid-term potential where they can potentially make a trade. But a lot of that capital is also repatriated. All of that capital also comes back. A lot of these apps make people, send the capital, that, or the gains that they make.
So once you make the gains,
so the gains come back to the country.
It comes back in.
And ultimately, a lot of the people that are investing live here, they reside here, their expenses are here, their livelihoods are here. So I don't quite see a big enough problem in the interim. I think ultimately the focus should be, mass sensitization, getting people to even understand basic financial concepts, drive, financial literacy as much as we can. And then I think that would have a ripple effect on, where people put their money or choose to put their money into. And that would also cascade into, local investments as well. Okay. And we're seeing quite a number of that, or, a bit of that happening as of today.
All right, so I'll take you back now to that, the app I was talking about, previously, the one that they've shut down, operations. And, a lot of people bought stocks, through that app. But now they're trying to onboard them into another, platform. That seems risky.
Yeah, so I was privy to the news quite a bit, and I tried to dig into that. I think there is this big question of like, what kind of apps should, retail investors use? What kind of due diligence, they should do, before investing in or choosing an app to invest in? I think ultimately, a lot of the apps that exist today answer that question around, regulatory, compliance type framework. In this scenario in particular, when I dug deep into like, what happened, it was an entity that was regulated, but that shut down, operations for whatever reason. It's not, the fun thing. It's not where, a typical business owner wants, the trajectory or the business to end. But in those kind of scenarios, because, all of the regulatory and compliance type questions have been answered, people are able to, transfer their stock, from one house, to another house. And that's the scenario that played out in this. So I think ultimately the important thing is, people need to ask those critical questions before choosing what investment app to use. And ultimately, when you use those investment apps, you should be rest assured that at the end of the day, worst case scenario, all right, the investment, the app is just a conduit of some sort. It's just, it's a platform that allows you to access certain things, right?
So if the app goes down,
yeah, you can always move your assets.
I can always, have my assets
moved elsewhere.
Yeah. All right. Take for instance, I want to hold a stock now for about, say, 10, to 5 years, because I like long-term, in investing. Can I trust these apps to hold for at least 10 to 5 years?
So back to the same thing. I think.
And how do I choose the right one?
Yeah, so I think trust is a function of how much research you do or how much information is available, for you to look at. But ultimately, I think the information won't drop on your lap, right? So you really need to dig deep. Ultimately, the ones that stay the longest, right, are the ones that have some, sort of regulatory supervision around them. They have a solid enough compliance framework, whether they do it as entities or whether they do it by partnering with, regulated counterparties, right? So ultimately, it's not all about, the UI or the way the app looks or the aesthetics and the way, how, interesting or how smooth, interacting with the app is ultimately around, these critical questions, right? When push comes to shove, can I transfer my assets elsewhere, right? In the event that, I happen to keep my app, my assets here, whether it's my equities or, whatever type of, instruments, is there, some type of insurance that's provided on those accounts? Outside of that, is there some type of regulatory oversight, like I said earlier, whether as the entity itself or whether by virtue of the partnerships that the company or the app has, right? So I think, retail investors need to ask this critical questions.
So many questions.
So. Yeah, and by, I think the biggest ones, like I said earlier, are just the regulatory and the compliance type questions, right?
All right.
And once those are answered, I don't see, a lot of concern.
Well, you can minimize the risk.
Yeah, I don't see a lot of concern using the
app. So where do you see, regulation going forward for these platforms?
So I think if you cannot... if you cannot beat them, you join them, right? I think, we've seen a lot of places around the world where people try to fight, innovation or people try to fight, interesting things that people are building. So ultimately, I think, the overall premise of all of these platforms, all of these apps, I think is quite interesting. I think it's quite appealing. I think, the pros are massive. I think as time continues to progress, there will be lots of benefits. And I think a lot of these apps will become, darlings, with the regulator, just off the kind of distribution that, they are seeing and they can get. Right, in present
maybe we'll have NGX bets at some point. Just that we have Wall Street bets. Thank you so much, Oluwatomi Solanke, CEO at Trove Technologies. It was great having you on the show today.
It was great to be here.
Thank you so much. All right, now that's the conversation. Now let's have an outlook for next week on the capital market. We see T-bill secondary market activities expected to be quiet, with yields seen trending southwards. CBN is set to roll over about 240.26 billion naira worth of maturities. Bond market yields remain bearish amid latest high inflation rate report, and the equities market is also expected to regain further grounds following significant moderation in the prices of bellwether stocks this week. So savvy investors will be cherry picking, at this time. All right, that's the show. Thank you so much for watching. I'm Ladi Williams. Bye for now.